With the US stock market on an unshakable moon mission over the past year, aging financial advisors and old-school index riders are enjoying their strong annualized returns that mostly outpace inflation. But this tortoise-paced style of buy and hold investing simply does not scratch our insatiable itch for cash. If our gains are not as thick as a Latin mommy's thighs, we gotta trade with more sauce. On Wall Street Bets, we're not here to watch paint dry. Our corrupted style is always in season, even if it makes our parents' financial planners want to punch their monitors like Ivan Drago on Apollo Creed. Let's grab 5 heaping scoops of degeneracy as we check out Wall Street Bets' most deranged trades. Rolling into the shop first is the appropriately named user German Whip Addict, who has been posting pictures of Mercedes-Benz and Audis since he joined Reddit during the 2020 pandemic. But as a fan of higher-end cars with custom parts, our Autofanatiker requires substantial funds to fuel his burgeoning hobby. Investing in the stock market, being the default way of making money without working overtime, is the obvious move. This summer, our motorhead popped open the hood, but instead of covering the cost of a new fixer-upper, the Whip Addict's trade got flipped around faster than the Wehrmacht at the Battle of Stalingrad. 90 days after dropping $7,000 on a series of bullish bets, the Whip Addict was down just over $4,500. $4,500 over 3 months? What is this, Mikey? A loss for ants? Don't worry, it gets worse. The fun part is where that $7,000 came from. In late summer, the car addict's mother went to Wisconsin for an unspecified but evidently very important reason, leaving Grandma in the hands of Whip Addict and his aunt. With their caregiving skills being subpar, Grandma sadly kicked the bucket on his watch. Whip Addict told his mom the bad news, but Mama Shotzi apparently had some bad blood with Grandma and had no interest in her funeral, allocating a little over $8,000 to the Whip Addict so that he may procure adequate burial on his own. But where his mom saw funeral costs, Whip Addict saw lottery tickets. To save on costs, the enterprising grandson opted to cremate his grandmother for about $1,000, thereby leaving himself with about $7,000 for stocks. To avoid suspicion, he posted a photo of a random grave on social media so as to deceive his family into believing Grandma was adequately honored. Having firmly condemned his soul, Lil Whiphead needed to make it worth it by capitalizing on the savings. At the time, the market was pushing itself to new 52-week highs on the regular. Bulls were firmly in control. To turn his gas money into car money, going long calls was the clear choice. The motorhead dumped his cash into 3-month options on volatile stocks with notorious difficulty growing their profits, expecting high PE ratio stocks to continue their surefire march higher. His grandma's death would not be in vain. Except the market had different plans. In early autumn, stocks took a breather, sending major indices back to their spring prices. To speculators, it felt like the sky was falling once again. German Whip Addict's calls burned to ash just like his grandma, who would surely be rolling over in her grave, if she had one. The big man had dishonored his family. His excuse is the often, "I thought I could get away with it" apology. And further, his misbehavior was on the cusp of being discovered, since Whip's mother wanted to visit Grandma's grave, which did not exist. In one fell swoop, German Whip Addict had transgressed beyond the classic degeneracy of Wall Street Bets. His shame shall be generational, and his road to redemption will cost more than money. When German Whip Addict stands for judgment, he's gonna need some fresh threads. Let's scope out the shop. We'll take a pause from the degeneracy for a minute and respect the drip. We're all fans of the madness on Wall Street Bets, and it's long past time to show the world our love for our wacky sub. And for some reason, you grown-ass men love Crocs. So what do we got for you? Knockoff Crocs. Rock the fuzzy or non-fuzzy Wall Street Bets Crocs at the gym, beach, or wherever you wear these things. And flex on the slobs who don't even know what 0DTE spy calls are. I'm wearing these myself, not gonna lie, in public nonetheless. And if you're way too controlled to flex Wall Street Bets footwear, we've got Theta Gang branding too. Throw up that flag and see how the ladies flock. Because they know, as a Wall Street Bets guy, you're just one dank trade away from yachts and Lambos. Check them out now at megalixerdrip.com. Link in the description. Feet pics extra. Let's get back to the madness and check out deranged trade number 4. The next candidate at the casino is the aptly named user GetRichQuick IDC How, aka IDK anymore, life is hard. As a longtime resident of our beloved sub, Get Rich Quick has deep-throated our philosophy of high-risk gambling without even gagging. His backstory shows a difficult position for this young and otherwise healthy man. At about 22 years old, he intended to move about 1 hour and 45 minutes from home in order to start an $80K a year job, which is a good start for a recent college grad. However, his mother begged him not to leave, because she would be unable to care for his younger siblings without his help, and thus they would be in danger without him. Afraid to abandon his family, GRQ decided to instead buy an electric car and commute 218 miles round trip each day, rather than eat up gasoline. The toll this took on him was exhausting, and convinced him that $80K a year would not be enough to break the chains of poverty. He needed much more sauce to put his family in a safer environment and pay off his college debts and the electric car loan. And there's no better place to get rich quick than the stock market. But our man wanted to play it safe and set up a realistic 10% per day income goal. This is not a picture I made for this video. This was his actual plan that he posted himself. Jokes aside, the further problem was, our man wasn't swimming in cash, and any taste of success drove an insatiable desire for more. In an early post, the big man described how he took cash advances on his credit card to the tune of $35,000 in order to invest in SPX futures on margin. It pains me that the chart screenshot is deleted, but his comments describe how he turned this $30,000 into $100,000 with some rapid YOLOs, which I tell you now is the happy ending he needed. He could have paid off his credit card, eliminated his debts, and probably paid off his car with just this one play. But of course, that's not possible, because what if he could do it again? So with a flick of his wrist and some tapping on the screen, he went all in on SPX once again. And wouldn't you know it, over $360,000 was his. But what if he could do it again? This is the part where the house always wins. GRQ decided that $360K wasn't enough. His next SPX play cut him down even worse than a Thanos snap, eating up about $250,000 like an appetizer. Still, with over $125,000 left, this could have still been a huge win. But what if he could get it back? The signs of gambling addiction soon became undeniable. Evidently moving to a new broker to try his luck on a different platform, GRQ went right back in, only to get slashed down like piss through snow, pushing him into another 83% loss, trimming him down to $26K. Now, in the red about $9,000 from his starting point, he vowed to change his tune and get smarter about investing. But his addiction needed feeding, and he couldn't resist. He did have some minor successes along the way, but each one was met with a more brutal loss. Scraping bottom of the barrel, GRQ signed up to Robinhood, where he quickly lost everything he had left. And by everything, I mean everything. With no money and more debt than he could pay, there was no hiding from reality anymore. He realized, about $200,000 too late, that trading was not for him. He contacted Robinhood support to close his account in late 2023, recommending other people avoid options completely. But his advice fell on deaf ears, even his own. By last week, he was trading again, since I guess he has nothing left to lose. Can't go tits up. Get some help, my man. Seriously, get help. And now, let's move on to deranged trade number 3. Next up in the hot seat is Brendog324. Like many of us, Brendog is a true man of the proletariat. At the ripe age of 20, Brendog is a core Gen Z, and as such, he's all caught up in the game. A perusal of our homie's post history shows a man resolved to the hustle and grind of the gritty Chicago streets from a young age, scoring mushrooms, playing Pokemon, working in a cafeteria, and driving for DoorDash while he pursued an unspecified degree in college. By working cafeterias since he was 15, in addition to his other side hustles, Brendog was able to save a tidy sum of about $39K by age 20. But read between the lines of his posts, and you'll learn that Brendog was just a little resentful that he spent so much time working. He basically had no life, and burning through college while working, side hustling, and playing Pokemon was no way to spend your best years. He needed to turn a corner. This quarter-life crisis turned him on to a potentially lucrative outlet, short-term stock trading. It took him about 5 years to save close to 80 grand, but by his math, if he could just multiply that money a few times over, he'd be saving himself years, perhaps decades of unskilled labor. And you know what? He deserved this. The clock was ticking. In November, B-Dog performed a market assessment and determined that the best strategy was to buy stocks that were priced low and sell them when they went up. A simple, scalable strategy. This is an exotic trading strategy called buy low, sell high, and it is rarely pursued successfully on WallStreetBets. Luckily for him, B-Dog had a solution. He could simply reference the daily movers list, which is a roll-up of stocks notching the biggest swings that day. This list effectively armed him with a curated assortment of stocks that were skyrocketing. With his life savings of about $39K locked and loaded in Robinhood, the path to riches was open. There's just one problem. Buying stocks that already made huge gains is called buying high, and is the exact opposite of his thesis. This is all made worse in that many of the daily movers are pump and dump penny stocks. Despite his sound intentions, things got ugly fast. In almost no time at all, our man had pissed away at least 30 grand by buying high and selling low. With only about 9K left, he realized that the income over the last several years of grinding away in cafeterias and delivering food to drunk people had evaporated into nothing. He couldn't go down like that. He needed to get back in. B-Dog did not share his next trade on WallStreetBets, but he spilled the tea in DMs. And by the way, if any of you aspire to get DM'd by Kamikaze Cash, please reconsider your goals. It's usually not a good thing. Brendog confesses that he got hosed on the daily movers, but gained 100% on Dick's calls on earnings, and then doubled again with Triple Q calls during a fierce bull rally, peaking at about 60K. He took some lumps after that, but bailed at around 40,000, putting him right back at break-even. The all-in strategy of gambling your last bit of life on short-term options actually succeeded. SPY was rallying strongly in this era, so his timing was superb, and his portfolio indemnified. But this is not the end of the story. Oh no. Making about 40,000 on options was fast and easy. The key to making money was clearly not in swing trading the daily movers, but rather trading short-term stock options. His minor clerical error with the daily movers had set him back, but now he was set up for success. It was time to go back in. On Tuesday, December 5th, the big shot shared the kind of screenshot we all crave. Brendog had performed extensive DD on Meta stock and determined it was poised to rocket higher in the next 3 days specifically. Opportunities like this don't come every day, and his 39 grand would soon multiply like rabbits in springtime. At the time, Meta was trading for about $318. His 180 call contracts at the 322.50 strike price were just 1.3% out of the money. His break-even was at about 324.60, a price Meta should easily leave in the dust. In celebration of his pending success, B-Dog lit up a blunt and kicked back, resolved to sleep in and awake to a bright green tomorrow. But the Zuck had something else in mind. When B-Dog emerged from his slumber, he discovered that rather than rising, Meta was down about 0.25%. That might not sound like much, but with options this short term, the dip had already cut off 10K. B-Dog paper-handedly smashed the sell button and leaned his head into the mirror in contempt of self. 10K, gone. Visual Mod did not hesitate to dunk on him for his reckless decision, but 29K is still a respectable sum, and he had recovered from worse. He just needed a new plan, and that plan was the stock whose name shall not be spoken but in whisper: GameStop. With $29,000, Homie went in on 218 calls expiring that Friday with a strike price of $15.50. At the time, GameStop was about $14.80, so his break-even was at about $16.80, a significant 14.5% out of the money. But earnings was due after hours, and GameStop had been selling so many Pokemon cards and Funko Pops that the stock was surely due to rip. Brendog needed a huge ape-induced rally, but instead got shat on. GameStop's results failed to please investors, and the stock dropped 6% after market close. By the following morning, Homie's position was obliterated, leaving him with a mere 5K. He sold what was left, leaving him with an emaciated carcass of a portfolio. He was robbed of all feelings other than pain. And then it got worse. While his portfolio was devoid of all positions, he watched helplessly as Meta rallied all day. If he had held, his position would have 3x'd to about 140,000. And as insult to injury, GameStop had also began a Pleistocene hominid rally, which would have also printed him a tidy sum by day's end. But instead of bathing in gains on gains, B-Dog was left barefoot and alone, being relentlessly dunked on by his fellow WallStreetBets regards. He teased the idea of going long VOO for the long term, but of course he did not follow through. His cope was palpable, and his explanation of why this situation is okay simply failed to convince. The truth was that his life savings was dusted, and it would take years to recover. He put the rest in C3 AI calls for some reason, and did indeed make back about $4,500 over the next 2 days. And then dusted that too with calls on Baba and Microsoft. With less than $3,500 left by December 11th, our man was down 90% in 6 days. In dramatic irony, he was worse off than those whom he insulted for their investing inexpertise just a year prior. Nonetheless, B-Dog's spirits remain high since the devastating loss after a brief respite to consult the internet on capital loss deductions. The workaholic has since been running some loan shark program on Reddit. Just a few decades of this, and he'll be back on top. Keep up that grind set, young man. You'll be back at break even by 2030. Now, let's check out deranged trade number 2. Among the poor and the bourgeois, there is a growing concern that the richest 1% of people in the US control 99% of the wealth. Whether that's true or false, it does not matter for our purposes, because both parties are ignoring the reverse 1%. What about that fraction of people who disregard all notions of rich and poor and treat money itself as their toy? A man who deeply requires such recognition is the highly regarded 1 Mall 4203. He is, by definition, the flagship of the reverse 1%. The bad man first showed up on the WallStreetBets scene in October 2022, showcasing his roller coaster of a portfolio. He stated that he made thick gains of over 330 grand by trading speculative stocks during the pandemic bubble, but subsequently lost almost all of it on AMC and Tesla options. However, he proclaimed this the start of a new chapter. Not only would he recover those highs, but exceed them. With his remaining 10K, he began his journey anew. In a stroke of luck, His Majesty Jerome Powell visited 1 Mall's college in early October, giving the resurgent degenerate an opportunity to gain valuable insight. But instead, he opted to troll Jerome Powell with out-of-context Milton Friedman quotes, while narrowly avoiding being counter-trolled by J. Powell's bouncers. He was forbidden from taking photographs, but tactically recorded the entire event on his phone and diligently transcribed the whole conversation that night, fueled by Red Bull and a splash of OCD. His transcendental experience into the mind of J. Pow revealed one thing: the US was cucked. If 1 Mall wanted to make money, he needed to go balls deep in China. In a now deleted post, 1 Mall indicates he made a gain of over $4,000 on Alibaba over several months before his girlfriend told him to pull out. However, he subsequently lost almost all of it on an unspecified SPY options play over the following months, draining him back to 1K. However, this misstep did nothing to hinder his next move, an aggressive push into the hot tech plays the bull markets beget. In early September, the burgeoning mad lad decided it was time to go full shaft. With only $1,000 to work with, our man dumped the whole pot into short-term Tesla puts, netting him $5K overnight. Then on Tuesday morning, he switched jackets and went full bull on Tesla and Palantir calls, adding another more than $5K. Just like that, he was back on track. What follows is a rapid salvo of gains porn, with the hotshot revealing subsequent days of full porting into volatile options. From Friday to Friday, the humble college student had rocketed from 1K to over 38 grand, intent on carrying on until he could pay off all of his unspecified debts. I thought he was talking about student loans, but he said these were gambling debts. I think he might be joking, but I'm honestly not sure. Riding high, 1 Mall threw down with sorority girls and Grey Goose all weekend. But in the background, something sinister was lurking. Our man fell into the trap of believing he was special. He was crushing $20,000 days like they were nothing, and became frustrated with dealing with naysayers who told him his degeneracy would catch up with him. He just didn't hear them until it was too late. Just 1 week later, the wild boy brought some mixed news. While his $100,000 portfolio could have paid off all his debts, he elected to instead pay off half of them, leaving the rest in options. If he could double again, then he'd get to pay off his debts and have a fat portfolio. But fate had other plans. By the end of the following week, one mall took it to the teeth when both Baba and Tesla spanked him at the same time. $65K, which could have got him out of debt completely, evaporated on some bearish market moves. Now, he was left with neither big money nor freedom from debt. He believed this happened because he broke his, quote, risk rules. But user DBGT-boy countered, if full porting into FDs wasn't breaking your risk rules, then what in God's name were your risk rules? It appears that his risk rules were that he has to keep making money. If he loses, he broke the risk rules. The only reasonable choice was to do it all again. With that $12K remaining, our man went in on a series of out-of-the-money puts and promptly lost another $5K. But he tossed his portfolio of Phoenix down by depositing his paycheck into Tesla, Square, and Palantir puts, which started off great until they went down the drain too. Refusing to quit, the big man went back into Palantir once again, diamond-handing his dying position until the bears finally retook control, putting him back over 21,000. With no change to his strategy, the mad lad went right back to his full port method, quickly racking up more than 50 grand in gains between Tesla, Palantir, Coinbase, and good old SPY. Some large losses on Palantir and Baba slowed him down, but did not stop his massive ascent to 80,000. And then, he got hit by an Uber. Our friend used extensive technical analysis to determine that Uber was overbought and due for a huge dip. With his entire portfolio, he wagered that this dip would happen the next day specifically. On Thursday, he bought over $88,000 worth of puts expiring Friday. And what can I say? We all knew where this was going. He said he lost $100,000, but that's bullshit. He only had $88,000 to lose. For the third time, one mall's gambling addiction got the better of him. Back to being a broke college student once again, he proudly declared that his Wendy's job would float him until his next bonus, at which point he could fund his trading activities once again. Further, he decided his best course of action was to write to his congressman to request legislation that people be allowed to deduct more than $3,000 in capital losses annually. His congressman probably didn't even read it, because she sent back basically boilerplate language, probably drafted by an intern using ChatGPT. At the end of the day, he couldn't even get thrown a bone. True to his word, One Mall has not stopped gambling, and appears to be trading high-risk options once again. His degeneracy is truly without limits. Fourth time's the charm, my man. Now, the moment we've waited for. Our number one most deranged trader. WallStreetBets, with its siren song of greed and gains, has an uncanny way of separating the weak from the strong. I proudly give you PVS88, aka YOLO Trader, a man whose audacity knows no limits. He appears to have a 7-year-old Reddit account, but like a wise person, he historically chose to touch grass outside instead of commenting on subreddits all day, as evidenced by this 3-year gap in post history on computer stuff. However, the coronavirus lockdown of 2020 appears to have hit our man hard, forcing him inside as his hobbies devolved into posting somewhat funny memes and underappreciated roasts. But talking about computers on Reddit was simply not adequate to counter the monotony of lockdown. He needed something better. It was in the explosion of users following the early 2021 GameStop shit show that put WallStreetBets on the map, in which PVS discovered our beloved sub. Enchanted by the aggressive trades, and apparently also a man of means, or with daddy's trust fund money, PVS joined the party on Friday, March 19th, 2021, by showcasing $250,000 worth of calls on a litany of high-flying tech stocks. He had some leaps on Tesla and NIO, but most of his positions were expiring the following Monday. In a now-deleted post that was evidently so shameful that he didn't want others to see it, our man admits that he suffered a devastating loss. Just as the market opened, Bitcoin took a huge dive, driving the crypto-laden Tesla to the dirt with it. The muskrat tweeted diamond hands to encourage his investors, but the plea only reached Tesla fanboys who were going to hold anyway. By market close, Call holders were wiped out on the almost 7% drop that ensued. Down over $150,000, PVS resolved to bail out and buy ETFs instead with the remaining $93K. But after doing the math, he determined it would take decades to recover that money and decided to hold after all, thereby losing another $43,000 before throwing in the towel. Down $200,000 and facing margin call on Fidelity, our man was illiquid, taking a job at Wendy's to provide some cash flow. This alone could have been a Dank Trades contender if I were paying attention around that time. But instead, this is just our new friend's origin story. Over the following 19 months, PVS toiled in the fry cook lines of fast food hell while slowly rebuilding his portfolio. How he went from $250,000 to working at Wendy's is unclear. Perhaps he said Wendy's metaphorically, or more likely, his starting balance was gifted or inherited. In any case, no doubt resentful of his losses, he was nonetheless resolute in his mission to return full power to the market and indemnify himself. Or perhaps, to avenge himself. By conservatively investing his money in indexed ETFs and making regular deposits through October 2022, our man's dedicated fast food hustle brought him back from $50K to $50K. We must remember that the market had been tanking for most of 2022. It was no doubt frustrating for PVS to see his deposits continuously decay during the bear market. Well over a year of labor, and the young man had not even moved the needle on his losses. In October 2022, nailing the market bottom, PVS had a moment of lucidity while talking to his reflection while drunk. This inescapable spiral was unacceptable. He needed gains, and he needed them now. In an unspecified trade, the young fast food employee YOLO'd his entire $50K balance on Netflix, doubling him up to $100,000. Just like that, he was back. But this was only the beginning of his redemption arc. The big day was coming. In the afternoon of Monday, November 14th, 2022, PVS kicked back into gear with a $100,000 portfolio. Inflation had been aggressively bonering the US for 2 years, and new producer price index data was due the following morning. The recovering trader's spidey senses told him that PPI data would show that J-Pow and the boys had adequately slapped down inflation, and there were clear skies ahead. The writing was on the wall, and it was time to take action. Just before market close, our man threw 80 grand at one day to expiration calls on SPX for 80 cents each, with an out-of-the-money strike of 40.50. This was the time to nut up. Feet don't fail me now. After what was certainly a sleepless night, PVS began refreshing his screen as pre-market trading began. When PPI data came in cool, the S&P took off like a bat out of hell, cresting 4,000 right out of the gate. Although still out of the money, the hotshots calls rode high on the momentum, ballooning from 80 cents to $8 each, an unbelievable 10x that brought our man from fast food purgatory to an overclocked $800,000 in the blink of an eye. Very intelligently, he sold everything before the market had a chance to dip and rode off into the sunset for about 6 hours. Then he came back and determined the market was too hot. He went back in with $20,000 of put options, expecting the market to sell off in a dramatic reversal. Even if this failed, he'd be sitting pretty. And as though the world spun to serve him, he was right. The following morning, arrogance began to fill the man's head as he anticipated another 10x gain on the red numbers pre-market, which would put him at the treasured $1 million mark. But although he did profit on those puts, it was nowhere near another 200 grand. And without hitting 1 million, the big man would not be satisfied. This lust for arbitrary round numbers is where audacity gives way to greed. Later that month, the near millionaire went in with $90,000 on out-of-the-money weeklies on Moderna and Netflix, Diamond handing them into zero. No rationale was provided, but we know why. He wanted to hit 1 million. No matter, late December was the perfect time for another wild trade, as the Santa Claus rally was dissipating. But to his credit, it does appear that he withdrew well over $500,000 around this time, possibly for Christmas strippers. But don't worry, we'll see that money again. With his remaining portfolio, PVS reflected on a quote by Warren Buffett that bad traders like to repeat: "Be fearful when others are greedy, and greedy when others are fearful." He determined that this philosophical quote meant that he should buy 0-day to expiration calls with almost his entire portfolio. But when the market decided that today was not the day to reward contrarians and continued tanking, our man loaded up even more calls, stretching himself to the limits. And then lost almost all of that too. $115,000 was gone in a single day. And by the time he threw in the towel and closed, the struggling young man's portfolio limped away with a few tens of thousands left. And by the way, this was late December, and capital gains on 2022 were locked in. He'd owe at least $250,000 on his net $600,000 gain. He took one last shot a month later in January, but he decided instead to go down with the ship as his call credit spreads ripped themselves to shreds. In his quest for that coveted 7-figure portfolio, the hotshot lost over $200K and still had to pay tax. If he wanted back in the game, he'd have to dip into the gains from November that were sitting in his bank. I don't know what happened to PVS 88 for most of 2023, because he didn't show up again until that December. At the time, he claimed to have realized substantial gains that November, but he shares no evidence of this. However, he must have gained something throughout the year, because what happens next is memorable. Because his portfolio size inexplicably increased by almost the exact amount he made the previous year, minus tax, we must presume that PVS withdrew his November 2022 gains and reinvested into the market during the 2023 bull cycle. And by December, that elusive $1 million mark was still hundreds of $1,000s out of reach. He wanted it bad, and he was determined to get it. Approximately December 2nd, 2023, PVS anticipated a Santa Claus rally to rip through the skies like Rudolph the Red-Nosed Fuckboy. In a YOLO meant to permanently break the chains of poverty, the wild child dropped his whole $690,000 pot on 3-week to expiration calls. Small positions in ChargePoint and NEO led the vanguard, with $650K of SPX calls at the 47.75 strike as the main body. It was a ballsy move, but Santa was on his side, and Old Saint Nick dropped a savage rally on Americans everywhere. All through December, the market charged higher, setting new highs along the way. By just December 19th, the lucky YOLOer was up $500,000, and his account had finally crested $1 million. Before tax. The pain of 2022 taxes still stung, and hitting that coveted $1 million mark meant nothing if he'd be on the hook for hundreds of thousands of dollars in taxes just 2 weeks later. So, he resolved to hold for even more gains. By the night before Christmas, the Santa rally had grinded to a halt, and Theta had chewed apart his positions. With only about $300,000 in gains left, PVS was back below $1 million. There was no choice now but to hold. And hold. And hold. Greed had supplanted reason, and on expiration day of December 29th, we see the true dissolution of a man ravaged by his own avarice. SPX had finished at 47.69, just 6 points below his strike at 47.75. His calls were worthless. His ChargePoint and NEO calls fared no better. Nearly $700,000 was gone. A whole $1.2 million downward swing from just weeks prior, when he had easily broken $1 million. Left now with the dishonored corpse of a portfolio, PVS resorted to taunts, countering those who recommended things like stop losses in the future. When thoroughly stripped of his pride, frustration consumed him. But it's difficult to convincingly dunk on someone when you yourself just lost $690K, in addition to losing another $500K of unrealized gains. The eternally strifing madman has one hope for 2024: better risk management. PVS, your unrivaled degeneracy leaves me at a loss for words, as my poetic descriptions fail to capture a tragedy of such magnitude. I can only offer you straightforward prose, and much more importantly, the crown of regards. May you wear it well.
Who wants to be king?
Come hang out in our free Discord, and don't forget to check out the merch shop for limited time only swag. Thanks for watching, and I'll see you next time.